All right. Good afternoon, everyone. Hope you guys are doing well. My name is John. I'm the founder of TheRockTradingCo.com. You can visit my website, TheRockTradingCo.com, as well, to see what we provide and the services we provide. And you can also follow me. As maybe some of you guys know about me. I don't know. I am on Twitter. I have a pretty heavy presence on Twitter. If you guys are on Twitter, you can follow me at The Rock. No, it's THE_rock trading. All right. So I've been trading over, since about 2011, 2012. So that gives me about, a decade worth of experience when it comes to investing and trading. Today, I won't talk too much about trading, or I'm sorry, investing purposes, if that's what you guys are into right now. Some can argue that this is a great time to start picking up some good names out there, such as AMD, NVIDIA, and Tesla, et cetera, since we've just been recently, due to all the headwind of the news, inflation, and CPI, and I'm sure you guys all follow the market pretty closely. So, it's a good time to start accumulating. I just don't think that anyone should go full on, unload their cash position into stocks right now. However, my group and our community, we focus primarily on scalping, day trading, day trading and swing options. And primarily, I only play with several tickers on my watch list each day. That includes Tesla, that includes AMD, QQQ, Triple Q, SPY. As you guys know, those are primarily the plays that I go for in this market right now. Back in 2020, I think it was very easy to buy any small cap name like Fubo, et cetera. And, it just goes through the roof, right? I mean, every investor thought they were geniuses in 2020 until the bear market happened this year. So a lot of things have happened this year, and yeah, I mean, we're so far we're still in a downtrending market. However, it is looking better for the last 1 to 2 weeks or so. Now that at least the market has found some type of temporary bottom. So you can see how volatile the market is also today over the last several months, right? So as the times change and the market condition changes, you should adapt to that, right? If you're used to going on long positions, I don't, at the start of the bear market, those are terrible times to start long positions. But so in my view, for now, it's still a great time to just make daily cash flow for yourself. Just by scalping options when it comes to the Qs or the SPYs or Tesla. I mean, Tesla just had an ER, they're amazing. I had $800 calls I bought last night and they went in the money this morning or so far today. So that's kind of where I'm at. So when it comes to scalping options, the first thing I'm going to do here is I'm going to go to the 5-minute chart. All right. And I don't have complicated indicators on my chart. I just followed my EMAs, the exponential moving averages. If you guys are using that, I'm not sure. Some of you guys are using potentially moving averages. Exponential moving averages move a little bit quicker to price action. Therefore, you could get a jump on the trade, whether it's put side or call side. So I'm just looking at triple Qs this morning. So the Qs ran up on news that the Eurozone, they're raising rates. For some reason it did. For the most part, raising interest rates isn't necessarily a good thing, but the market is starting to move on from these headlines, right? Whether the CPI was bad, which is the core or core price index, or whether PPI is bad, PMI, et cetera, all those acronyms. It seems like all the bad news lately has been largely ignored by the market, right? It's like old news now, right? So this is a great time to start swinging some options because the market is catching momentum on the upside, and you can use technical indicators to help you stay in the trade when it's obviously the trend is still there, or to get out of the trade once the trend breaks, right? Whatever time frames that you want to use. I'm going to go over the 5-minute day trading strategy that I use, and then I'll talk about 30-minute and 1-hour timeframes in case I want to take advantage of further upside or downside of the trend using the exponential moving averages. Now, I am using TrendSpider. Okay, a lot of you guys may be using TradingView, et cetera. They have all these indicators. So my first several indicators, EMAs that I have is the first one is my immediate short-term 5-minute EMA 9 and 15. And you guys could use this strategy, feel free. So the 915 would be this would be this 915 cloud. So this green line here and this red line here, that would be the EMA 9 and 15. The second one, the third one, sorry, that I use the EMA 21. So you see this heavy orange line, and further below that is 34 and 50. And then also down here, what I have is EMA 100 and 200. When it comes to scalping options, okay, you can clearly find support and resistance areas once the volatility in the morning starts shaking out. Okay, over the last couple of days, we saw pretty good dips in the first 25, 30 minutes of the market. Okay, I wasn't going to go chase, you know, the cues this morning on this slight run up. Okay, it wanted to go past a pre-market high, so we know that's been a resistance. So 305 was a resistance, and so it tried to reach into that 305 area and failed. So I started to buy some puts in this area. Once I recognized, number one, you have a very topping candle here. That's a very high wick candle, all right? And you can play the downside. Once the price starts moving below the 9 and 15, this is a 9 and 15 this morning, that acted as a form of resistance, right? You guys could clearly see that, all right? So those are indicators for you to actually go short on the cues, all right? So once this started happening, I actually loaded some Friday puts. I usually play pretty close in the money options. Okay, so if it's like if the price is currently 302, I'll buy a 301 put. Okay, if I'm going to go call, I probably buy a 303 or 304 call. Okay, I don't play zero DTEs, which is the same day expirations. You probably want to stay away from those because you can get caught in the wrong direction really, really quickly. So you want to go next day out. If some of you guys are playing SPX, okay, S&P 500 index, there's zero DTEs every single day, right? And those can be highly lucrative unless, of course, you know, they come out with news that Apple slows hiring and the entire market sells off, right? So you catch yourself in the wrong direction. This market, I will say as a side comment, is very, very driven by the news, okay? Any good news, the market just pumps. Any bad news, the market just tanks really, really quickly. But we've seen so far, and this is why I'm slightly turning bullish so far in the market, is that this week we had news that Apple, Google, and Microsoft is slowing down hiring or going on a hiring freeze, but the market has completely shaken it off. So it's pretty interesting how that's happening. Now, anyway, back to my scenario here. So once I'm in that put trade, okay, green candles are going to come out, right, to kind of fake you out, you know, shake out the puts, okay? But as long as a 9 and 15 starts rejecting, I'm going to stay within the put, all right? And we took it down to nearly the 300 level. And now the 300 level isn't necessarily any type of technical support. It is more of a psychological support. So we know that the 300 held on the day, and it's time to what? Exit that put trade and start looking for a position going on the long side. There are two ways to go about if you want to play the call side once you kind of figure out, okay, the dip is done here. Now, one thing that you can do is that generally once the cues are starting to come around, you'll see it'll start to test a 9 and 15 cloud once again. Okay, once it tests a 9 and 15, once it breaks out, a lot of people will start buying calls and going long, not long in terms of like, you know, long dated expiration, but, you know, long calls, right, for tomorrow or maybe 3 days out. All right, you can definitely do that. And here the black line is my moving average 200. All right. When I'm in a trade and I'm going long on a call, I need to see that there's strength in the price action. And my moving average 200, besides a 9 and 15, is one of my primary indicators, okay? When you start seeing prices run away from this black line, you guys see this black line, eventually there's going to be some healthy correction or dip that comes back below the moving average 200. If the market has strength, it'll generally move back over the moving average 200. So here is when I started to play with, I started entering 303 calls, 305 calls, and I kept scalping it up on every big green candle that I get, I'm trimming down those positions. So if I start with 10 contracts, I'll generally start reducing by 30% or 33% on each big green candle that I can get. Okay. And then, so once I did the 303 call here, there was good strength here. It hit that moving average 200 and then it bounced and it just kept on going. I don't know if you guys were watching the cues today, but now that the trade is over the moving average 200 black line, now you'll see it's moving over to 3450, which is the yellow and black line here, this little cloud you see here. Now things are starting to turn up, right? So now you have an EMA crossover. Okay. Once the EMAs cross over, you'll see that there's more volume potentially coming into the market. There's more buyers, there's more scalpers, there's more traders, because everyone wants some type of confirmation that the price is going to sustain. It's not just another fake out, right, for further downside. So we see here, so once I took off the 303 calls, I went in the money and I took it out most of my position here in this particular candle here. I did leave some here on this candle, knowing that a dip might come, but I didn't want to risk the profits, right? And that's the thing about traders too. If you guys are scalping the market, you have to be very nimble and very protective of your profit. Okay, never let a green trade go red on you. That's the worst feeling you'll ever get. All right, at least in the market. So now we're watching, right? Now we're watching to see, okay, is the market going to sustain this action? We saw this pull back pretty heavily back down to about 303 from the 304 area. But guess what? The 3450, I'm sorry, the 9 and 15 EMA clouds and the 21 EMA held. Okay, those are good indicators to me that, hey, this is pretty good looking bull flag, if you will. Okay, this kind of looks like a nice bull flag, and that things may continue to run. Okay, so should you buy right away on the next 5-minute candle? No, not necessarily. What you want to do is give it a few more minutes just to see the price action. If there's strength, go for it, right? I mean, don't think too much on this. Let the indicators be your guide versus how you feel. All right, so once it pops over to the 9 and 15 cloud, all right, I'm in. Okay, so I got in a 304 call. I actually sold most of my position on top of this candle near the 305 price area, and then I let the rest ride, and that was a good decision. I even bought some more down here as well, just for the breakout. So you see, so far on this day, all right, since this reversal down here in the morning, we've been riding this 9 and 15 cloud pretty well. All right, now it's up to you when you want to take profit. Okay, so now we're at the 306 to 77 area. Where is this market going? Is it a dip coming, or should I ride it some more? This is where you need to protect, number one, your profits, and actually start using oscillators to actually indicate where you should be going or what you should be doing in terms of this trade. Now, I use the stochastics, simple stochastics here, preset values, and I also use a CCI, which is a commodity channel index. These are pretty good indicators that I use primarily to tell me when the markets are oversold and overbought on the 5-minute channel. I'm sorry, on the 5-minute time frame. Okay, check this out. If you follow the price action throughout most of the pre-market, or maybe you want to check this in yesterday's action and compare it with the stochastics, is that when the stochastics are reaching in this area about 100 or so, that is a value of overheated market. Okay, so once we ran at 305 in a pre-market, guess what? Right at the bell, right? I mean, it had to come down, right? And then once it crosses over here, there is some action, but don't get too fooled by it, all right? Especially in the first 20, 30 minutes of the market, because there's a lot of misdirection that happens with the indexes because, people are trying to figure out where the market is going, all right? But once the stochastics move down here, okay, you can see it starts crossing over on the upside. So this gives you a very clear indicator that, number one, the markets are oversold and it's time for a bounce, okay? So what I'll do is not only will I look at my EMAs as a guiding factor, but also, is the market oversold? And in this case, yes, it crossed over right about here on this green candle, and I waited to confirm that it could actually move over to 9 and 15 clouds. Therefore, I took the trade. Okay. But you're looking at this market now. There's such momentum and velocity, right? Moving on the upside with the EMA 9 holding for the most part of this morning. You're looking at these stochastics and it's overheated, especially on the 5-minute channel. It's overheated on 30. It's probably overheated on the 1 hour. This is where you need to become more protective of any profits. And if you feel like you're over trading, you should probably exit the market and just call it a day. Or, you can take the chance of, see if the Qs will hit 310 today. I don't know. Right now, I'm not in any Q trades because I realize and recognize that I've made good money on the run up and I don't need to over risk it because now it's starting. Now it's about lunchtime, right? So the markets tend to get low volume, a little bit of chop. I would wait until towards the last 2 hours of the day and about 50 minutes or an hour from now, then the market should give me a good indication. But here's what I'll do. Notice how so great the momentum and velocity of this price action is today. So what I'm going to do is I'm going to wait until the stochastics actually come down here. All right. And most likely the price will start moving towards the 305 EMA 21 area. And that's where I'll buy the dip and actually go for the trade back up if there aren't any bad news that's causing that dip. Because normally, obviously, people want to take profits. And so markets pull back. You need to determine if it's just a healthy pullback to buy the dip or it's really a dip and you should be buying puts. So anyway, the next trade that I'll do on the Q is most likely once it actually resets on the stochastic, okay? And once that resets and there's nice momentum back up, I'll buy it back up at the 21,915 breakout and then go for another trade, okay? Now, the CCI is actually, for me, the CCI is more useful on a longer time frame. So now that I've covered that, I'm gonna go over the 30-minute chart, okay? The 30-minute chart, actually, I'm gonna switch my charts here. In 1 second. So on the 30-minute chart, okay, let me actually blow up this screen here. Go over to the 30. My 30-minute chart is a lot more simpler, as you can tell, a lot less lines. All right. So this is the 10 and 50 EMA strategy for swing trading if you decide to take things overnight, okay? The red line is my EMA 10 and the green line is my EMA 50. This should give you a clear indicator for at least a short-term swing. I'm not talking about a week swing. I'm just talking about a few days, maybe just simple overnight. You can see that, let me actually turn on the pre-market as well here, okay? So since what you want to actually look for the downside or the upside is you want to look for the EMA crossing. Once again, it's very simple, just like how I explained it with the other EMAs on the 5-minute chart. We can see yesterday, about 2 days ago, once the market shook off the news about Apple on, I think it was Monday, we had the bad news on Apple. Okay. So Monday, the things were running up, right? I mean, hey, everybody's having a great time. And then all of a sudden Apple says, whoa, we're going to slow down hiring right in the thick of things, right? And so the market went from literally 296 to 287 in 1 day. I'm sorry, 288, but 288 actually held because that was a good support level. So when should you get back into Q? When should you actually buy calls? Well, this was the perfect time to do it, right about the beginning of the day on Tuesday. Once the market shook off the news, it just took off. Okay. Once that EMA 10 and 50 crosses, those are generally good areas to buy calls. All right. And you take profit accordingly on the way up. What you don't want to do, okay, is catch yourself in a moment in a situation like this, is that you let the profits ride and the market actually starts closing in below the 10 here. Okay. All right. So now, if you bought calls yesterday, if you're not watching a 5-minute chart, you're not watching a 10, right? And you just focus on a 30-minute chart, you could just ride the trend all the way back up. Okay. So if you bought calls down here on the crossover, near the crossover pre-market on Tuesday, you would be running from 292 to 306. So that's a hefty profit, right? That's like 400% profit if you just took a 290 call. All right. So you can ride this trend. Okay. Now here's the thing. when the price action starts dipping below the 10, EMA 10, okay, what should you do? You obviously need to have good intuition where your supports and resistance are. And of course, you want to look at your daily charts on longer time frames, okay? That's number one. Number two is if it starts going below that EMA 10, okay, what you want, I would obviously start closing out the position, okay? But the next thing you want to see is, will the EMA 50 hold? Okay, because if the EMA 50 holds, then you have a shot at re-entering the calls and write it back up. All right. In this situation of pre-market yesterday, it never even touched the EMA 50. Okay. But so right in the morning, all right, the 30-minute candle jumped up right back over the EMA 10. Okay, so once the price action starts crossing over that 10, gives me enough information for me to at least swing maybe 2-3 days out in terms of a Q call. Okay. But guess what? Like I said, this market is highly driven by news and all the things that's happening in the world. So what happened? Google decides to drop a news saying that they're going to stop hiring, right? So it's just a really tricky market. So once that happened, the market said, nope, don't like the news. But so people started to sell. When did I get back in on the day? Yes, I did. I got back in here because why? The market shook it off, just like it shook off the Apple news on Monday. Okay, so just ride it through. All right, ride the trend as long as you got it. Now, obviously, we're taking a little dip here. Here on the 30-minute chart, we've been riding the EMA 10. Okay, held. It held the EMA 50 actually this morning on the dip down to 300, and it held perfectly. You see those two little bottom wicks? Those are what we call tweezer bottom candles. All right, so the tweezer bottom candles. Good. That's good enough information, good enough indicators, good enough strength. I'll take the calls. Okay. Now, on a 30-minute channel here, look at your stochastics and look at your CCI. All right. These things tell me that we're due for a cool off. All right. So I'm just going to wait out until maybe a dip down to the EMA 10. If there's a dip to EMA 10, I would totally entertain it. Okay. At 304.76. If that comes true, I would love to take that dip. All right. Obviously, you want to be careful because sometimes dips can keep dipping, right? But so far on this chart, if you bought calls earlier this morning, you could still ride this out. Okay. Yes, obviously things are going to take a dip. Now, on the 30-minute channel, you also have to recognize candle structures and also learn how to read the candles, right? This is a pretty clear evening star on the 30-minute channel. I'm sorry, 30-minute time frame here. So this is where obviously if you're up a lot, you need to take profits. Okay, maybe you let a few runners stay on. Okay, that's up to you. But at this point, because of CCI and CCI is actually pointed down. Therefore, you have some bearish divergences happening in the market now. Therefore, you need to protect profits and wait for a dip. If you believe that the market will continue running, wait for a dip to buy calls. If you believe at this point that the market is exhausted from this morning run, then you can obviously buy puts. Now, if you did buy puts, where would your targets be? Obviously here, EMA 10, 304.76. If that breaks, you could probably see 301. Not likely. I don't think that'll happen today, but anything can happen. So that's the 30-minute, and then the 1 hour. Let's say you want to get really, you want to really zoom out here, and you want to go for the long side, and you're getting that sense that the momentum's hot. All right. So if the 1 hour EMA 10 held virtually for the last 2.5 days, right? 2.5 days, it's held to 1 hour. All right. But once again, it's kind of one of those things where you just need to be careful, taking profit on the way up. All right. Because you're looking at the stochastic is that since Monday, we've been at severely high stochastics. Okay. So the market just overheating over and over again. I don't mean that it won't continue to go up. It's just that it's eventually at some point in the near future, it's got to cycle back down. Same thing with the CCI. If you're looking at the CCI, it's been hot for the last 2.5 days, ever since Tuesday, right? Tuesday, Wednesday, Thursday, and now it's moving on the downside. So you have to be careful. All right. But if I were to review the cues on a daily, look at this. All right. if you just kind of quick pointer here, if you look at this area here where we started to exhaust ourselves in this bull run back in May and June of this year, you'll notice the CCI is pretty much here. Okay, this is telling you the market is now very obviously overheated, and you're going to have to check volume too, because so far from what I can tell on the market is that this run up is very low on volume. That's another indicator, probably one of the most important indicators to you for direction. If the volume is low on the Qs and the SPYs and the prices continue to run up, there's not enough buyers. Okay, there's not enough market participants for you to trust that rally. So you'll notice that same thing with this run up here in this area, right, where we double topped at the 30296 level. You'll see the CCI also cycled down from that level as well. Pullbacks are healthy. It doesn't mean that the bear market is back, or you need to be 100% puts. It just means that things need to cycle down, and that if you're buying calls, you need to be a little bit more nimble and a little bit more cautious in terms of how much you're playing and your position sizing. So if you look at these patterns here, all right, yes, we finally broke the 296 level a couple of days ago. So we're here in this area, and you're starting to see what the CCI and the stochastics excuse me, it is extremely, you're not going to give me my box. There you go. Okay, so the CCI, so that's the warning for today. CCI is way too hot. It's got to start coming back down. We do have a lot of economic events next week. The big five of tech companies are reporting. That would include Microsoft, Apple, Google, Meta, and Amazon. All right. And also FOMC meeting. Rate decision would be on Wednesday. GDP data on Thursday. Lots of stuff happening next week. VIX is probably going to go through the roof. However, you'll start noticing that this is very, very exhausted. Now, I would actually pay attention to stochastics here on the daily here and start looking at when they start to actually come down, meet and cross on those blue and red lines. Once they start to cross, you should see the market start to consolidate, either for a big down move or a big up move. So I like the move today, but I don't trust it completely. So I'm not playing it too much right now. It's already shattered through so much EMAs and resistances. We're starting to get into this last CPI release was on this candle here, which was June 12th was the last CPI data. So you're starting to see that pattern repeating, right? I absolutely think that we're over the next several days or next trading sessions, you're going to see the market start bouncing around in this area, probably between 300 and 305. Just kind of go sideways for a few days, trying to figure out what the market wants to do. Now, of course, the FOMC, if they decide to do a 75 basis points, and I do think the market runs up, if they do a 100 basis points, I think the initial shock should send Qs back below 300. And if the market's strong, then you can likely see that maybe some type of trend will start holding here at the potentially 296 level once that initial shock of the rate decision, if it is 100 basis points or 100 basis points. So that's basically it. Very straightforward strategy here on the 5, 30-minute and 1 hour and even a daily chart. One thing, since I have a little bit of time and I think I can end it early too, is that you want to pay attention to VIX. VIX broke down under my support line here today, and the market's obviously running up. But usually if VIX is this low and this oversold, you can look at the CCI. Every time it gets to these levels, you'll start to see. So let me give you an example. When VIX hit about here in this area, right? In this area back in early March, April, all right, you can see how VIX just shot up in this area from nearly 20 to almost 35 in one big run, okay? Here, right, you see the VIX cycle down here on the stochastics, And this is when VIX actually ran from 23 over to 35. Okay. Now you're getting the sense that everybody's so happy with the bull market as it seems, and you got to watch VIX because VIX is low again. If we get some bad economic data or bad news, you can expect VIX to blast through this upper resistance line of 35. If it's terrible, then it's going to be. It could eventually go to 40. I'm not saying it will, but that's what the chart suggests. Okay. So with that being said, once again, if you guys like this presentation, want to join our community, it's therockTradingCode.com. You can there's pricing information there. It's only $59 a month to join our community. I do daily videos of market updates. I do weekend updates. I do supplemental watch lists over the weekend, and I give you a daily watch list as well and price levels to watch as well, and some trading signals as well. If I enter any scalps or long positions, I generally like to alert those. So with that being said, I hope you guys enjoyed this presentation. Back to you, David. I think I'm done.